Good morning. It's time for another edition of PreMarket PulseScan with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the infamous six-pack. If you are thirsty and parched financially and you know you need something to drink, come on over to PulseWaveTrading.com and break bread with us for as low as $69 a month. You can't beat that nowhere, no how. Come and get down with the famous soybean and cotton system that works in all markets. That's right, all markets. If you want to trade with a loaded gun rather than a little BB gun, you need to come over here and get down with us. With that said, let's take a look at what's happening in the overnight markets. Some of you will probably like this, and then others will probably not. Here we go. Now, the markets were down after the initial jobless claims came out this morning. They were abysmal, as was expected. And so, the markets are already down. They already knew that. So whenever you get a report that the market is already priced into the market, it doesn't really necessarily react all that much. But in this case, we went from being negative, 300 points in the Dow to now being up 30 points in the Dow. So everything has turned green on the screen for the most part. And that seems to be that, the market is starting to show signs of strength. Whenever the market can rally on bad news, that means the market is strong. All right, the bullish momentum is strong. All right, if the market crashes on good news, that means the market is weak, i.e., the bear market is strong. Okay, futures are pointing to higher open. Markets are running now, so that's a good thing. If you're long the stock indexes, you are a happy camper right now. If you're short the stock indexes, depending on how you're short, you may have some time on your hands. You may be able to set and ride this out and see where it goes. Will the market rally today? Will it fall today? You don't really know. So if you have sensible shorts in, then you may be all right too. Everyone wins in a scenario like this, depending on how you position yourself in the market. Today is definitely going to be interesting, though. Big time. Take a look at what the futures are doing right now. The Dow is up 108 points now. We're down like 300 points, and now we're up over 100 points. So we're at 21,147 now. The overnight high was 21,356, and the low was 20,510. So you can see how much the market has rallied off of its lows. The NASDAQ 100 is up 23.5 points at 74.90.5. We got as high as 75.49.5, and we've rallied off the low point of 73.10.25, showing some real strength here. The E-mini S&P 500 is up 2.5 points at 24.69 even. The market got as low as 24.02.25. And the overnight high was 24.97.5. So we're racing back up toward that. Looking like we're going to test those overnight highs. The Russell futures is up 11 points at 11.08 even, and it got as high as 11.11, so it's right near its highs at session. And it's rallied off of the overnight low of 1068.7. So very powerful moves here in the stock indexes. Gold is now up Bitcoin is up $10 at 6,640. It had got as high as 68.05 and has since rallied off the overnight low of 65.65. Nat gas down 2 pennies at 163. Crude oil, it's been kind of quiet for a while here. It's down 60 cents, trading at $23.90 a barrel. It had got as high as $24.67 a barrel before turning down. The low so far is $23.42. So we're off the lows at this point, but just quiet, not really moving a lot. The bonds, long bond is up a full point right now, trading at 178.24. All right. The gold market now is up $31.10, trading at $1,664.60 an ounce. It is only like $1 off of the high right now, the overnight high, but it has rallied powerfully off of the overnight low of $1,611. Silver right now is up 2 cents at $14.90. It's right near the highs of the session, which is $14.92.5. It has rallied off the low in the overnight, which was $14.40. US dollar is getting punished. It is down 116 pips, trading at 99.87, which is we're actually at the low of the session. We just hit a new low. This is the low of the session. It has fallen from the high of the session, which was 101.01. Isn't that something? So powerful moves off the highs of the session for the US dollar. Markets are really mixed. They're trying to take in all the data that's coming out. All right, if you take a look at your currencies, the euro yen is down 80 pips. The euro is up 114 pips, trading at 110.22. Pound sterling is up 144 pips at 120.37. Aussie is up 80 pips, trading at 60.46. Looking at food, beans are down 1.5 points at 8.80 even, and corn is down 2.25 points at 3.46.25. So that's how the futures markets are shaping up right now. For those of you that are in the trading room, go ahead and take a look at the alerts tab. I did post all of the open positions, and I've updated the stop losses on all the open positions, as well as I updated the working orders as well. So you will note that some of the entries have changed, as well as the corresponding stops with those entries. So be sure to check with that. You're going to want to do that before the market opens. The worst thing you can do is wait for the market to open and then try to get orders in. Most of the time you would have missed your entry, and then you're chasing the market. The best way to do it is to, as soon as you get your reports, go ahead and type your orders in with the corresponding stops. That way, if you're busy doing something else when the market opens, you didn't miss your trade and you got your stops in as well. So that's just a good habit for those that trade the equity market anyway. If you trade equities, you really have to be disciplined and have your tickets working before the market opens. Now, I know the $1 billion question is, yeah, but what if the market is gapped up in the pre-market or extending hours, or it's gapped down? So what? What does that have to do with you? I cannot tell you how many times I have seen it where the market looked like it was just gapping up in the pre-market or gapping down hard in the pre-market, only to have the opening bell ring and the thing reverses all of that overnight noise and goes the opposite direction. And the overnight market in the equities does not carry over into the day session like futures and forex and crypto. All overnight activity carries over and is considered part of the following day's trading session. So equities is different. You have to ignore the extended hours and pre-market hours. You got to ignore all that. Just be disciplined, put your tickets in, let the market come to you and do what it's going to do. All right? Do not worry about overnight and extended trading hours. That has nothing to do with you. We're day session hours traders, all right? So just wanted to put that out there for you. You don't have to worry about gaps. Equities gap all the time, almost on a daily basis. Gapping up and down, doesn't matter, has nothing to do with what we're doing. All right? So ignore the man behind the curtain. All right? Get your orders in. Stop playing around. All right. Let's see here. Yes, the Slack app. That is correct. Joel, that is correct. Slack. It's in the Slack app. All right. So let's see. If you need help with that, you can hit Frank up. He'll help you out. Either him or Jen will be able to help you out with that. They are the efficient ones. All right. So let's see. Where were we? I owe someone a solid from last night. So let's go ahead and do that first. I admit it. I messed up. They pointed out to me that I did not cover silver. How dare I not cover the silver market? What is wrong with me? All right, I'm going to hook you up. I'm going to hook you up right now. We're going to get into it. I'll pull up the we'll pull up the gold and silver chart. I know I did gold, but hey, I thought I did silver too, but my bad. We're going to hook you up right now. Make sure you see it. We'll just do them both, just because you can't do one without the other, right? All right, let's pull it up. And for some odd reason, my computer's acting real special. So bear with me. I need to figure out what's going on. Things like to always mess with me when I'm trying to do a live. All right, let's take this out of here. All right, this should help. This should help a lot. So let's see. Let's go ahead and update our charts, and then we can get right into it. All right. We'll do it in reverse order. We'll take a look at silver first. And we do have the hindsight and forward sight because the market's already open. All right, here we go. Let's change our screens here. All right, here's your solid on the silver. Okay, so as you can see here, we're coming off of this primary rally alert back here on the 19th of March. And then we've been riding that primary rally alert all the way up. Today, we received a secondary rally alert. So this went out last night. All right. This went out last night. So right now, looking at the silver, like I said, we're trading near the highs of the session. We hit 1492.5 is what we've hit. So haven't really moved up all that much. And the overnight low was 1440. So what the market has done, in a sense, it's taken out both the highs and the lows of yesterday. All right, so you're taking out the high and the low, and it looks like we're trading the May contract right now. It looks like May is the front month contract for silver, and my gold looks weird. It looks like we're in January. How is that even possible? Give me a second. I want to look into this and pull this up, because sometimes that has a lot to do with things also, folks. You'll see something like you'll have an entry, but then it could be the same day that a contract rolls over to the new front month. So then things kind of change a little bit. So let's see here. I'm going to put, all right, yep. So yep. All right, the active contract seems to be May right now. So yep. And for those of you that that are not familiar with all the future symbols, you should be able to look those up. Most brokers have that. If you go to their website or what have you, you can pull up all of the corresponding futures contract months. Not all futures trade the same contract months. Some are different. Some trade every month. Others only trade 4 quarters, like your stock index futures. They only trade the 4 quarters to correspond with the 4 quarters of the business cycle, the business year. So you'll have like March, June, September, and December for your stock indexes. But then when you start trading some of the other things, you got to really be careful and make sure that you're trading the front month, because that's the one that usually has the most liquidity. You don't want to be trading, something that's not front month. All right. And each month has a corresponding letter associated with it. All right. So be sure that you're trading the active month. And on the silver futures right now, that's the K. So make sure you have all that up in front of you when you're trading. When in doubt, if you're using the Thinkorswim platform, all you have to do is come into the trade, hit the trade tab, and then under all products, go ahead and type in the /SI, and then right below that, you have a drop down menu that says active only, 3 month or all. I always like to do 3 month because some of these, like I said, they have 12 and you'll have too much data on the screen. So I just do 3 months, and it'll show you what the active one is, and it'll show you how many days are left for trading in that particular product. All right. So you want to go ahead and make sure you're in that. You're in the right one. We're no longer in April. We're trading the May contract. And those contracts expire on the month that they're trading. All right. So that's how you know, because it'll say so. All right. Capiche? And it also tells you up at the top too, right on the right hand side of the symbol. It shows you, it says silver futures, and it says ETH, and then it'll say like May 20, which is the year 2020. All right. So that is the active contract we are in. All right, the May 2020. So because of that, now that I'm looking across, there's not really a lot of difference, which is good. So normally with contract rollover, there can be an enormous difference. Sometimes it can be absolutely devastating. Like you can be long a market. Let's say you're long silver and you've been long ever since it hit 11, right? But now it's time for this contract to roll over. It's moved all the way up to, let's say, 13. You're like, yes, I'm up 2 full points, right? And the new contract it rolls over to, let's say it's trading at $9. You're like, what in the world? So you have to get out of your position. So you would, and if you want to roll over, you end up taking the profit in the one, right? If you just get out and take profit on it. But if you like wait for the thing to expire or whatever, and they roll you over, you're screwed. That could be quite devastating because you can't get out in the one that you were in. It's crazy, man. Anyway, I just wanted to show you that. Okay, so as I was saying, we are now in the May contract. So on this one here, I'm looking for silver to go to about maybe 16 because that's the trend line resistance right here. So hopefully it should be able to ride up there. Just keep in mind, this is going to be a strong overhead resistance, but I think we should get enough energy to pop through it. All right. So with that being said, let me see here. What else? Oh, let's pull up the gold, just in case you guys missed the gold one last night. Gold has been a lot more powerful than silver. As you can see, it's already above the trend line support and the Kumo cloud, respectively. We do have a primary crash alert for today, and it doesn't look like it's going to get played out at all. Market wants to rally and stay strong here. So I have gold at 1665 right now, up 32. All right, so this one hasn't played out yet. Just keep in mind that these primary alerts do tend to lead the market. All right, they can lead the market 3 to 5 days out. So just keep that in mind as well. In this case, though, it's looking like that's going to be it. We have this bullish pointer right here that the market is trying to contend with. It has not taken it out yet. So it's trying to. It's trading within the range of the bullish pointer right now. We'll see. Will it give in to the overhead pressure and fall as the crash alert is indicating, or is something else going to happen? So this is definitely an interesting one right now, especially for those that are bullish. All right, so that's all I got on that. Now, the next thing we need to do is get into some of the info that's come out this morning. So give me a chance to pull that up. Let's see. All right, so first thing on the docket, we got the crown jewel of data. Stock slump as unemployment surge overpowers relief at Senate passing the $2 trillion stimulus bill. the first real measure of just how far and how fast the world's largest economy has contracted because of the coronavirus. U.S. jobless claims spiked to a record 3.3 million as coronavirus triggers widespread unemployment. The previous week record was 700,000 in 1982. We have bested that by over 300%. Deep recession is inevitable. Ex-ECB chief Mario Draghi calls for huge stimulus to prevent a coronavirus depression. Too late. You're already in it. The challenge we face is how to act with sufficient strength and spread to prevent the recession from morphing into a prolonged depression. You're already too late. Remember, the markets love this stuff. This is very bullish for the stock market. For those of you who don't know, who are not privy to how Wall Street works, is Wall Street loves, loves layoffs. It loves it. All right. It goes to bed at night dreaming and thinking of layoffs. Layoffs save companies oodles of noodles of money. All right. They love it because then they can use that savings and put it in the proceeds column because they see our earnings per share just went up. We have way more cash now. We don't have to pay these people their salaries and their benefits and healthcare. All that's on them now. Yes, we're good to go. That's how the market looks at it. All right, my man wants to know: is this is gold bullish today? Absolutely, just like I just showed you in the chart a few seconds ago. Yes, it is bullish right now because the market is up right now $30. Now, even though we have that primary crash alert, we got to still watch it. You got to watch your gains. You got to watch this market because it could reverse intraday. All right, so just be aware of that. All right, and if it doesn't and it keeps going, then more than likely, if it rallies and closes strong today, then we'll get an inside day for Friday. So instead of like a take back Friday, you'll probably get a narrow range inside day Friday. So just something to take a look at. If you're long gold, talking about the paper market, not the physicals. If you're a long gold, just make sure you tighten up those stops. All right. BlackRock says rebalancing into risky assets after $2 trillion U.S. stimulus. Washington efforts have set the scene for an eventual economic recovery, the asset manager said. Fed's Powell, U.S. may be in recession, control of virus to dictate timing of economy reopening. The first order of business will be to get the spread of the virus under control and then resume economic activities. All right. EU lawmakers to approve aid for coronavirus hit economy and remote vote. The European Parliament will vote today on a 37 billion euro fund to shore up the continent's economies. U.S. businesses groups warn Buy America order would harm pandemic response. The U.S. Chamber of Commerce and others warned the White House that the mandate would worsen shortages of medicines and delay discovery of a novel coronavirus vaccine. Ooh. Ooh. Oh, that's messed up. My man said, good morning from prison, UK. Yeah, unfortunately, they got y'all locked down hard over there. All right, but we're not going to let this go. We're not skipping over this one. I got to go back. I miss nothing. I miss nothing. Let's read this again. U.S. business groups, plural, not one group, not two groups, groups, plural, warn the quote-unquote Buy America order would harm pandemic response. The U.S. Chamber of Commerce and others warned the White House that the mandate would worsen shortages of medicines and delay discovery of a novel coronavirus vaccine. Please let that sink in for you guys right now. All right, please. Now, this is not me with a conspiracy theory. Remember, I told you, like Lionel says, I'm a conspiracy analyst. This is not even a conspiracy. This is right here in your face. All right, there's the opening bell for those of you who are not paying attention. If you need to go put those tickets in, please make sure you do it right now before the market gets away from you. For the rest of you, listen to what this says one more time. It says, if they stick to what Donald Trump says, President Trump says, and we want to buy American, pro-American, let's strengthen American. There's the Chamber of Commerce and other groups are saying that that's going to hurt the U.S. Because if you left everything in the hands of America, there would be no vaccine for the coronavirus. They just said it in their own words. And they said it would lead to shortages of medicines. They just told you we're weak, we're incompetent, and we don't have any manufacturing in America. So if you leave it up to America, it's not going to get done. They just admitted that. They just admitted that. What kind of foolishness? They just admitted it to you. They said, yo, we weak. We're weak, we're whack. We're weak, we're whack. We are weak, we are whack. America is incompetent and inefficient. We can't even manufacture what? We can't even manufacture medicine? We can't even manufacture a cure. I thought this was the greatest nation on earth, and we can't even come up with a novel cure, a vaccine for the coronavirus? I thought we had the best healthcare system in the world. Don't we take in billions of dollars in donations for cancer research? Billions of dollars. What happened to all this money that's being raised by all these organizations? And you saying we don't have no money? You just printed $2 trillion to bail out all these companies. You don't have no money to come up with a vaccine? Really? Really? You can't even manufacture masks and gloves and ventilators for patients in these hospitals? Where's all your money going? What in the world? You see, I'm just saying, look, this is their own words. They said this, I didn't say it. They said we can't do it. Nothing is made in America. They just admitted it to you. Nothing of value is made in America. We get everything imported to us. So you can miss me with all this America greatness stuff. America is not great. America is falling apart. The nation is crumbling underneath of our feet. You are witnessing the fall of an empire. The U.S. is going belly up. They just told you so. What more is it going to take? They just admitted they can't do it. Don't leave it up to us. We can't do it. We can't. We are weak, lethargic, slow, and incompetent. We can't manufacture medicines for our people. We can't even make ventilators and gloves and personal protective equipment, PPE. We can't even manufacture PPE. Is there anything that we can manufacture? Anything? To me, this coronavirus is really exposing just how tore up a nation we have on our hands right now. And it is a sad thing to behold, folks. A very sad thing to behold. I wish it weren't true. I wish it weren't happening. But what can we do about it? Nothing. It is upon us. All right. It is upon us. Whether we want to deal with it or not, this is happening. This is our reality at the moment. All of these things are happening. Incredible, man. Absolutely incredible. I cannot believe what I am seeing and hearing. I can't. So with that being said, where do we go from here? Well, the good news is if you're a bull in the market, markets love this kind of thing. Markets love it. The markets love it. They love it. All right? They love this kind of stuff. This kind of stuff encourages companies. They say, hey, we're saving money. We got money, man. We're making money, man. Why you mad at us? We're making money, man. So you say. So you say. All right. We'll see what happens with the market right now. The Dow's up 400. It's liking it. It's liking it a lot. And we'll see where we go from here. I mean, right now, gold is still surging. All right. Gold is surging. Everything is rallying right now. The dollar is weak. Crude oil is down right now. So it's making Doug look real good. But am I saying this correctly? I thought Doug was higher than this. This is interesting. Hold on. I feel like I'm in the twilight zone when I'm looking at these prices and stuff. Okay, showing that Doug is off. Did they do something to Doug that I don't know about? Did they reprice it a little bit? Because I could have sworn that it was a lot higher than this yesterday. I'm showing Doug at $102.10. Anybody else seeing that? DUG trading at 102.10, the high of the session. Can somebody fact check me? Anyone there? Frank, are you there? Can you pull up your thing? You know what I'm talking about? That platform thing that you use. Can you pull that up and check ticker DUG? It's the inverse ETF for crude oil. Just want to check, see if I'm missing something, because this is weird. Now I know they've been doing doing stuff with the 3x ETFs and stuff like that. I know that JDST, Nugget, and Dust got some adjustments, and JNUG is pretty much where it is. They didn't really have to touch that one, but some reallocations. Anyway, I did, like I said, updated all the open positions and all that, so you may want to go and check that out. And let's see what else. There's something else I want to tell you guys, and I can't recall. It's going to come to me. All right, let's move on. All right, so the next piece of news we need to talk about is this. All right, let's see this. Americans will suffer the most in the collapse as they had the highest standard of living. You know, that's very true. That is a very real and true statement, if I've ever heard one. That is a true statement. And it's unfortunate too, as well. It's very unfortunate, because what you tend to witness in situations like this is that people that are used to having and have not had to suffer, it's going to be hard for them, man. Just like it was hard for Private Benjamin. Remember that show, Private Benjamin? It was hard for her. She grew up with money and having to do without money and work for a living and do the things that were required of you, having to make your own way, make your own name for yourself. That's a task. A lot of people have grown up with privilege. They didn't have to grow up with certain disadvantages and things of that nature. So then when it's thrust upon them, some thrive and some don't. Some will and some won't. Some make it, some don't. It is what it is. Let's see. You're asking about the video game. ISH. No, I don't remember Homefront. No, I don't. And to be honest with you, in 2011, I know you guys are gonna laugh. This may come as a shock to you, but I was not a console or PC gamer. All right, I didn't own. I never owned a PlayStation or an Xbox or none of that. So I wasn't up on those games. I've always been a handheld game guy, you know. So I was always into that. I had a Nintendo 3DS, but I didn't get into the console gaming until 2017. That's when I went out and got a PlayStation 4, and I got a PlayStation 3 on sale at GameStop. So yeah, man. So I'm late. I don't know that game. Is it like a survival type game or something? Uh-oh. All right, my man shows 102.46. This is interesting. Hold on a second. All right, let me see. Looks like I'm having some sort of a delay or something. Let's see. Bear with me a second, you guys. I need to look this up. Okay, that's weird. All right, he says 102.46. No, it hasn't even hit that today. Oh, North Korea invades the USA. Nah, I seen the other one though, the one where Russia invades the USA. I seen that one. I saw that, but I haven't seen the one with the North Korea. I might have to check that out. But um, definitely something to think about though. The momentum right now in some of these markets, like in the inverse ETF for the oil, it's under negative momentum right now, which is very interesting according to the algos. The algos are saying it's under some selling pressure. That explains why crude oil being down a full buck and my Doug ain't moving. Interesting. I'm about to try something now. Give me a second, folks. I need to try something real quick. Need to see everything is working properly. But that can tell me volumes as well. If prices are having issues, that could also be an indication that something is up. Let's see. And we have seen a lot of fast markets and things lately, so bear with me. I'm going to do a quick little test. This will let me know what I need to know. All right, so there it is. Oh, wow. Okay. So my quote thingy is having some issues. I do see that. Very wide, man, there's a disparity between the bid and the ask, though. It's huge. And very little volume today. What in the world is going on? Nah, I'm showing the NASDAQ and S&P up on the day. I got the NASDAQ up 145 and even the S&P now at 47 and the Russell at 36. So let me just check myself here. Wait a minute, you guys are scaring me a little bit here. Yeah, we're up. The Nasdaq is up, and the E-mini S&P is up. I'm not talking about the cash market. The cash could be down, but the futures are up. So I'm not talking about the cash. All right, so I'm not bugging then. Okay. All right. Update then on the orders, folks. All right. So I'm putting in I'm adding my shopping list. I'm editing my shopping list. I'm adding something. I will post it in the room in a moment. Let's see. Just gotta make sure that my stuff is working properly. Hold on. All right. Let's see what happens here. All right. Close that down. All right. I'm going to post an update. Let's see here. Bear with me just a quick second. I got to update to the working orders and the open position. So just give me a quick second to finish that. And you'll be able to see that in the alerts tab. All right. All right, it's updated. Check out the updated working orders and filled orders with the stops updated. Yeah, check that out, especially the HDGE. Go ahead and check that out so you can see what's going on with that. Frank, where you been, man? It's all good. It's all good, folks. Don't worry about it. Sometimes things like that happen. That's why I asked for your helps. That way I can double check. Because if I'm having the issue, everyone else could be having the issue too. All right, so we got a rally going on here on Wall Street today. It's a small one, but it's still a rally nonetheless. Let me explain what I do with the orders on days like this. I keep all of my working orders open. Always got my orders working. And I update the entries if I have to at the end of each day, along with the corresponding stops. I'm sticking directly to the reports, so I'm straight organic on these trades that I'm doing. I'm not popping any of them unless we get like really dramatic moves. If I get like a really dramatic move in my favor, then I don't have a choice but to pop my way through it so I can lock in as much profit as I can. But these are volatile sessions. You should always have orders working. I'm talking specifically right now to the equities traders. Those that trade futures, forex, and the cryptos, you have a little bit more flexibility when it comes to entering or exiting the market. Don't really have that much flexibility on the equity side. So that's why I'm stressing this. You should always have your orders working on the equity sides of corresponding stops. If markets gap, who gives a darn? You want to have your orders working. The market gaps, it'll fill you and take you with it. Even if it backs and fills first, it takes you with it. All right. That's why we do this. We don't chase markets. We don't guess. We don't throw darts at the board. We stick to the report, find the securities that you want to be involved in, and place your orders accordingly, and let the market do the rest. All right. So with that being said, we got a nice little rally. Gold is holding up. It's up 25 right now. Okay, it's doing a little something. Oh shoot, you just reminded me while I'm talking to you guys. Yep, I have a position update. I just got filled in something, so let me update my screen for that. I thought I was doing something when I just sent this update. Give me a second. Markets are moving kind of fast on us. All right, so this one is, hold on, give me a second. All right, got it. All right, so we have a change to the filled orders. So I'm updating that right now. All right, we just added a new position. You'll note that now. I just added it. I just put it in the alerts, under the alerts tab. So you see the one that we stopped out of, and then you see the 3 that we're currently holding, and then we'll be adding to that with the above working orders. All right, and you'll notice that a lot of them are primarily going the opposite way. Sometimes I just do that. I have to play both sides, because sometimes you just really don't know how the markets are going to behave by the end of the day. So it's always a good idea to get in the habit of getting in there, have your orders working, that way you don't miss anything. All right, there was something else I wanted to share with you guys. Let me find it. Okay. As far as the black eye this morning, the black eye is the unemployment. That's number 1. And number 2, chambers of commerce groups telling the White House that you can't just rely on the U.S. We have to be dependent now on foreign, not just foreign oil, but also foreign everything. We are totally dependent and unable to do anything. We don't have any manufacturing in the U.S. That's basically what they're saying. We have no manufacturing. Now, as far as the 3.3 million Americans who just filed for unemployment benefits, the pace at which Americans are losing their jobs is absolutely breathtaking. According to the Wall Street Journal, the largest number of new claims for unemployment benefits ever recorded in a single week prior to this year was 695,000 during the week that ended October the 2nd of 1982. So that means that what we are now witnessing is completely unprecedented, as the U.S. Department of Labor reports a stunning increase of 3.3 million people sought initial jobless claims last week amid the virus lockdowns, almost double the expectation of a 1.7 million increase. As Bloomberg wrote earlier, St. Louis Fed President James Bullard made a shocking prediction the other day that U.S. unemployment may hit a 30% in Q2. St. Louis Fed economist Miguel Farah E. Castro published a blog post today explaining the back of the envelope methodology used to arrive at a 30% unemployment rate. He noted that about 67 million people work in jobs with high risk of layoff, including sales, production, and food preparation. In addition, 27 million people work in businesses that require close physical contact, such as barbers and restaurant waitstaff, right? Now, these numbers that they have here in the article are very interesting. Civilian labor force in February 2020 was 164.5 million. Unemployment rate in February 2020 was 3.5%. Unemployed persons in February of 2020 was 5.76 million. Workers in occupations with high risk of layoff is 66.8 million. Workers in high contact intensive occupations is 27.3 million. Estimated layoffs in second quarter of 2020 is 47.05 million. Unemployed persons in second quarter of 2020, 52.81 million. Unemployment rate in second quarter of 2020, 32.1%. Ouch. Dude, that is Absolutely mind-boggling. Ooh-wee. All right. What was that, Karen? You said 100. Australia had about 100,000 people line up for unemployment on Monday morning, with much more to come, up to 1 million, they reckon. Oh man, that is awful. But you guys see the thing with you guys though in Australia, there's all those fires, right? You're now is your country still on fire, Karen? Is the country still on fire? Because we really haven't heard too much of that because the only thing we've been hearing lately is about the coronavirus. So, Karen, is your country still on fire, or has that been taken care of? And now you guys are just back to the rebuilding stage. I would like to know that because our thoughts and prayers are definitely with the Australian peoples. Okay, you said no. It's okay now, huh? They've got a lot of houses to build. Yeah, that is true. A lot of houses to build. So the fires, see, that's the thing. They like showing you devastation, right? But what about showing us now that the fires have been put out? You see what I'm saying? They don't want to show you anything positive. They just want to show you bad stuff. They want to show you Rome burning, but they don't want to show you when the fire has been put out and the big mammoth task of rebuilding. They don't want to show you that stuff. They just want to show you the harsh things, which is that's not good. It's not a good look. And it shows some dishonesty also, on behalf of the mainstream media. Not that they've never been dishonest before. We already know that they're all about that fake news. It's funny that they tried to coin the phrase to put on the alternative media after our U.S. government infiltrated the alternative media and put paid shills there to make alternative media look bad. And that then already came out. All right, folks. So yeah, no more Brexit, no more of that, no more Hong Kong protests, none of that stuff. None of that. Crazy, isn't it? The coronavirus put a stop to all of that. Yeah, please like and share and subscribe if you haven't already done so. Hit that bell icon so you can be kept abreast of new content. I've been in the lab forever, and I'm hoping that is finally done. I think I'm done. I've been in the lab for now. So now I'm going to work on content, and I have just a mammoth load of content coming your way. So be prepared for that. And, come on over to PulseWave Trading, man. Stop playing around. Come break bread with us. Make some money. Because this is history, man. This is an opportunity to make that cheddar. All right. All right. So with that being said, I'm out of here. I'll see the rest of you guys in the trading room, and the rest of you I'll see for this evening's end of day report. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And right now, we're taking a lot out of this market today. Go Pulse Waves. Okay, what was that, Zora? If silver has a bearish pointer on the weekly, let me look. That's actually a good question. Let me look. I'll hook you up. We are very partial to subscribers on this particular broadcast. If you haven't noticed, whatever they ask, I just give it to them. If you think about it, at the end of the day, they are paying for such service. Am I right? So here we go. Let's see here. I got your back. All right, let's see. You said weekly, so let's pull up the weekly. Yeah, you talking about this one right here? The prior, like going back. Yeah, that is a bearish pointer. Absolutely. Yep. Can't avoid it. Bearish pointer. So here's what I'm thinking. Silver's really been struggling, man. Like really struggling. You see how it finally got out of the Kumo cloud up in here? It finally got out. And it looked like we were really going to do something. We made a bullish pointer right here on the weekly, only to have the market totally reverse on us, right? and it kept falling. Then it just stopped on a dime, got a little dead cat bounce, hit resistance, fell back down, made a bearish pointer before coming up and hitting the trend line resistance again, right? Making another bearish pointer. So back-to-back pointers equals trading range. Then on the next bar, just absolutely fell out of bed, broke all the prior supports, then continued to fall some more, spike low, only to reverse and come back here. And now it's visiting resistance yet again. Oh, this is soybeans. I'm bugging. No one even caught that. No one stopped me. No one stopped me. You let me make a heel out of myself. You didn't even stop me, y'all. Y'all didn't stop me. All right, hold on. And I'm glad, because guess what? I wasn't sharing. I just realized I wasn't sharing with you guys. You didn't see nothing I was talking about. So hold up. I guess my coffee ain't kicking yet. That's funny. That is funny. I'm a mess, ain't I? All right, let's see. Here we go. All right, here we go. Sorry about that. I am a mess. All right. This is a weekly chart of the silver now. Okay, so to start over. As you see, we finally got above the Kumo cloud, right? We're like, okay, all we need now is the trend line to come on out the cloud and we'll be golden. We hit this massive bullish pointer right here. And we were like, okay, we know the market's about to set it. And then we finally got the trend line out of the cloud too. It was like, yes, this is what we're talking about, right? This is what's up. But the market kept falling. Then it came right here on the trend line support and bounced. We're like, yeah, go ahead and rock it up. Why don't you? Another bullish pointer. Then the market hurt our feelings because it gave up. Came down here, made a bearish pointer, which means trading range. So we two back-to-back narrow range inside weeks. Then on the third, we break out. All right, break out of that consolidation zone. Come up here and hit another high, but it's lower than the previous high. So this is considered a failed top, like a double top. These two. Then the market comes down, falls below Kumo cloud and trend line support. The next week we get back above it, little dead cat bounce. Sorry, cat lady. Dead roach bounce. How about that? Dead roach bounce. And then the following week we give it all the way up. Right? So we have the first primary crash alert on the bullish pointer, right? Secondary crash alert, right? Followed by another crash alert. This time the market really meant business. And now here we are. This is somewhat of a bearish pointer, somewhat. And then now here we are as of right now. So the market is really, the silver market is tore the heck up. You got problems. You got problems because you got the long-term trend line below the Kumo cloud now. All right. You don't want to see this below the Kumo cloud like that. When you got price and trend lines below the Kumo cloud, that is uber bearish. It is not a good look. It is not a good sign. Okay. But we trade what we see. On the short term, we do got a primary rally alert right here. Can it make it up to the trend line at least? That would be 1660-ish. We'll say 1660. So yeah, well, it's good for a ride to 1660 if it can get there. So I'll give you that as far as any kind of a green shoot. But when you look at this momentum right here, that momentum is straight bearish. Very bearish. All right. Someone has a question. What are your thoughts on why there was such a huge drop? You know, when it comes to silver, and I've said this before, for those that don't recall, I said it before. The reason why you are seeing such a situation like this with silver is because, remember, silver is a commodity, but it's also a currency. So it has that dual personality. Okay. The dollar has been strong for a minute now. So when the dollar is strong, commodities fall. Commodities are weak. They don't have a choice but to fall, right? So that's what's been happening. Silver's been acting like a commodity instead of a currency. Gold, on the other hand, has been acting like a currency instead of a commodity. So that's why we're seeing what we're seeing. Now that's a pastoral answer. Now I'm gonna give you the jerk answer. You ready for the jerk answer? Here's the jerk answer. The reason why this silver chart looks the way it does is because currently there are more sellers in the market than buyers. That's the jerk answer. Like, no kidding, right? No, but seriously, I do still maintain a bullish outlook on gold and silver, the precious metals, because as the reality of our economic situation continues to unfold, I think the blinders will come off and people will realize, yo, this is serious. This ain't no joke. We gotta do something. We gotta do something. We gotta get up in here. You know? All right. So the stock market is on fire. It's on fire. The Dow is up 700 points, folks. The nasty NASDAQ is up 180 points. Can you say Q, Q, Q? What up, Q, Q, Q? Is it time to pop? I missed an opportunity yesterday. So I'm going to watch the QQQ, and I might have to get to popping. I might have to start popping off. I may get to popping off on the QQQ. So be prepared for that. You may see something happening up in there. I'll let you know. I'll keep y'all abreast on what's what. Or will I? Will I keep it all to myself? All right. Ooh, the Dow just jumped and skipped. It's about to hit up 800 on the futures. Woo! All right, the market's out of control. This is a red alert. Red alert. Red alert. Red alert. My quotes are beginning to pause, freeze, jump, and skip. That is usually a strong sign, depending on where the trend is in the market at that time. Since the trend is bullish right now, that means that we could see an enormous upward move today in the stock index futures. Please watch your money. It's not the day to say, I'm going to go shopping and leave your computer. Unfortunately, I'm sorry. You're going to have to stick with it. The volatility is sky high through the roof. We got to keep our eye on what's happening so that you can be in a position to take profit if the market is indeed going to turn. All right. And it's looking like it does have that ability to do that. Okay. So keep your money on your mind and your mind on your money, and make sure you do what's what. All right. And who knows, if it does well, this could be a position we could build and add to. All right, let's see what else. Yeah, the Fed money is starting to pour into the market. That's what this looks like to me. Remember, they did promise before this that they were going to do something every Friday, like $1 trillion or something crazy like that every Friday. All right, so with that being said, folks, like I said, keep an eye out, man. Keep an eye out. I know I am. And looking at possible, hold on. No, I thought I saw a 2-bar chart. We don't have one, but close enough. Definitely watching this, though. This is getting real good here, getting real exciting. We'll know what's really going to happen by 10:30. When 10:30 hits, that's the first hour of trading. So then we'll have our direction for the day, or we'll be range bound for the day, or what have you. So it's looking like the market wants to run today. Yeah, we could hit circuit breakers if we keep this up. All right, folks, I'm out of here, man. PulseWaveTrading.com. I'll see our members in the trading room and the rest of you. I'll see you for the end of the day report. Remember, handle your money, handle your business, and I'm out. Peace.